Have you ever scrolled through social media and seen a finance guru promising to make you rich with one simple trick? Or maybe you've sat down with a bank advisor for a free financial review. It feels great, right? Getting valuable advice without spending a dime. But what if I told you that free advice is often the most expensive kind you ever get? Today, we're pulling back the curtain to reveal the hidden costs of free financial advice and what you're really paying. Let's start with the mirage of no cost. Why do we love it so much? It's simple psychology. The word free bypasses our critical thinking. We see it and we think, what's the harm? There's no risk. So we flock to advice from social media influencers, bank advisors, and anonymous forum posters. The initial advice might even seem helpful, like a tip to save more or a general stock market insight, but this is often the classic bait and switch. That initial value is designed to hook you. Soon the conversation subtly shifts. The bank advisor who offered a free review suddenly has the perfect mutual fund for you, one that just happens to come with a high management fee. The online guru who gave you a free webinar now wants you to buy their exclusive course or sign up for a trading platform using their affiliate link. This brings us to a hard truth. In a capitalist system, genuinely conflict-free advice is almost never free. People need to make a living. If they aren't charging you a direct fee for their time and expertise, you have to ask yourself, who is paying them? The answer is almost always someone else, and that someone else's interests are probably not aligned with yours. The advice isn't altruistic. It's a marketing strategy. It's designed to lead you down a path where they eventually get paid. This leads to the silent drain on your wealth, opportunity costs, and misaligned incentives. Let's say you follow a popular influencer's tip to invest in a specific hot stock. The advice is generic, given to thousands of followers. It doesn't consider your personal risk tolerance, your financial goals, or your timeline. Maybe the stock does okay, but a personalized strategy could have put you in an investment that performs significantly better, tailored to your long-term goals. That difference is the opportunity cost, the missed gains you'll never see. Then there's the commission conundrum. This is a huge one. Many financial advisors, especially those at big banks or insurance companies, are compensated through commissions. This means they get paid when they sell you a specific financial product, like an annuity or a life insurance policy. Their incentive isn't necessarily to find the best product for you. It's to sell the product that pays them the highest commission. This creates a massive conflict of interest. They are serving their bottom line, not yours. A truly independent advisor, a fiduciary, is legally obligated to act in your best interest. A commission-based salesperson is not. Their generic advice often ignores your real needs, costing you dearly in the long run. On top of that, we have the information overload trap. The internet provides an endless firehose of free financial content. One expert says to pay off all your debt immediately. Another says to leverage debt to invest. One tells you to invest in index funds, while another is pushing crypto. What's the result? Analysis paralysis. You become so overwhelmed by conflicting advice that you do nothing, which is often the worst decision of all. Or, you might panic and make a poor choice based on the loudest, most confident voice you heard last. This is especially dangerous in the influencer echo chamber. Many social media personalities build huge followings by projecting confidence and success. But much of their advice is unverified, oversimplified, and often sponsored. They might be getting paid to promote a risky investment or a high-fee platform without disclosing it properly. You're not getting financial guidance. You're watching a paid advertisement disguised as friendly advice. Even worse, as we look towards the economic landscape of January 2026, a lot of the free advice circulating online is outdated. A strategy that worked 5 years ago might be disastrous in today's market. Free content often isn't updated, leaving you to apply historical tips to a reality that no longer exists. So, let's unmask the true paymasters who is really footing the bill for all this free advice. First, there are referral fees and kickbacks. An advisor might recommend a certain mortgage broker or accountant because they get a secret payment for sending you their way. This influences their recommendation, whether that professional is the best fit for you or not. Second is data monetization. Have you ever used a free budgeting app or an investment tool? Read the fine print. Many of these platforms make money by collecting your personal financial data, your income, spending habits, investments, and selling it to third parties for marketing purposes. You're not the customer. Your data is the product. Finally, and most commonly, the goal is brand building and lead generation. All that free content, the blog posts, the videos, the podcasts, is designed to do one thing: establish the creator as an authority. Once they've earned your trust with free tips, they have a built-in audience to funnel into their actual paid products. The free content is the top of the sales funnel, designed to eventually convert you into a paying customer for a high-ticket course, a coaching program, or a premium subscription service. So, what's the alternative? How do you invest in real value? First, learn to identify genuine fiduciary advisors. A fiduciary has a legal and ethical obligation to act in your best interest. When you're interviewing a potential advisor, ask them directly, are you a fiduciary, and how are you compensated? Look for fee-only advisors who charge a transparent flat fee or a percentage of assets under management, rather than commissions on products. This aligns their success with your success. Next, empower yourself through self-education. You don't need to become a Wall Street expert, but building your own financial literacy is the best defense against bad advice. Read books from reputable authors like John Bogle or Morgan Housel. Follow trusted, independent financial journalists. Use resources from government sites like the SexInvestor.gov. The more you understand the fundamentals, the better you'll be at spotting biased or flawed advice. Finally, you need to learn how to calculate the return on investment of paid advice. It might feel counterintuitive to pay a few $1,000s for a financial plan when you can get advice for free, but think about it this way. If a qualified fiduciary advisor helps you avoid one major mistake, optimizes your tax strategy, or increases your investment returns by just 1 or 2% a year, they will have paid for themselves many times over throughout your lifetime. The cost of truly professional, personalized guidance is an investment in your financial future, and it almost always far outweighs the hidden, and often devastating, costs of free. Remember, when it comes to your money, if a product or service is free, you are not the customer, you are the product. Thanks for watching, and if you found this valuable, don't forget to like and subscribe for more content that helps you take control of your financial life. See you next time.